Ondas Holdings Inc. is currently trading at exactly $6.77, plummeting approximately $0.73 or 9.74% on this trading session as of 1:13 p.m. Eastern Time on Thursday, November 20th. The intraday chart is currently carving out a jagged, aggressive downward slope, having opened significantly higher before capitulating to a wave of selling pressure that has persisted since the opening bell. We are watching a classic gap and trap scenario play out in real time, where early optimism was violently sold into, pushing the stock below the psychological $7 support level and testing the liquidity zones in the high $6 range. The immediate expectation from the retail gallery, seeing a nearly 10% haircut on the screen, is that the company has stumbled. The expectation is that the recent rally, which saw the stock nearly double in a matter of weeks, was a fluke, a pump and dump orchestrated by chat rooms, and that today is the inevitable hangover. They see the red ink and assume something is fundamentally broken. That is the expectation, a bubble bursting. The reality, however, is vastly more complex and strategic. What we are witnessing today is not a fundamental deterioration of the business, but rather a capital allocation shock. The market is reacting to the massive news dropped today regarding the $35 million strategic investment in Performance DroneWorks, PDW. Investors are looking at the cash outflow and panicking, failing to see that Ondas is effectively buying its way into the combat robotics supercycle. This drop is the friction cost of transforming from a niche industrial radio company into a diversified defense technology powerhouse. Common belief suggests that micro-cap drone stocks are speculative toys, prone to endless dilution and zero revenue. Investors look at Ondas Holdings and categorize it with the graveyard of failed SPACs and overhyped tech plays. I want to challenge that perspective immediately. If you look at the balance sheet, post-October offering, this company is sitting on a war chest of over $400 million in cash and equivalents. This is practically unheard of for a company with this market capitalization. The market is punishing the stock today because they're using that cash to make bold bets, like the PDW deal, rather than sitting on it or buying back shares. This is a mismatch of time horizons. The day traders want a quick flip. The management is building a conglomerate. Today's volatility is simply the transfer of shares from the former to the latter. Let's dissect the intraday volume because it is screaming for attention. We are seeing volume turnover exceeding 20 million shares already, which is multiples of the standard daily average. This high-volume sell-off indicates a changing of the guard. The weak hands who bought the earnings hype last week are exiting, terrified by the sudden drop. But if you look at the Level 2 data, you will see massive absorption walls sitting at $6.60 and $6.50. These are institutional buy orders. The smart money likely understands that the $35 million spent on PDW is not an expense. It is an asset acquisition of a company that is already manufacturing combat drones for the U.S. military. They are buying the dip while retail is selling the fear. While the panic sellers are focused on today's red candle, we need to contextualize this with the broader tech sector. If you look at NVIDIA stock or Tesla stock today, you see a general risk-off sentiment in high-growth names. Ondas is effectively a high-beta derivative of the AI and robotics trade. When the Nasdaq sneezes, stocks like ONDS catch a cold, but this correlation is superficial. Unlike a software company that trades on multiples of future hope, Ondas is trading on a backlog that has just hit record highs. The correlation we should be watching is with the geopolitical instability index. As global tensions rise, the demand for attritable or expendable autonomous systems skyrockets. Ondas is positioning itself to be the primary supplier of these systems, and today's price action is a distraction from that geopolitical reality. Now, let's go deep into the Performance DroneWorks PDW investment because this is the catalyst for today's movement. Why would the market sell off on this news? Because $35 million is a lot of money. It represents a significant chunk of their liquidity. Investors are asking, why not just focus on your own drones? But here is the insight. PDW is a leader in combat robotics. These are small, heavy-lift, jam-resistant drones that are NDAA compliant and used by special forces. By investing in PDW, Ondas is not just buying a stake, they are likely securing a manufacturing partnership or a technology transfer agreement that accelerates their own roadmap by years. The market sees spending. The strategist sees speed to market. In the world of defense contracting, being first to the battlefield is everything. This deal essentially fast-tracks Ondas into the Pentagon's inner circle of trusted suppliers. We must also address the special meeting of stockholders scheduled for today. This is adding fuel to the fire of uncertainty. The vote is likely regarding the authorization of additional shares or amendments to the incentive plan. Authorization of shares is a trigger phrase for retail investors. It sounds like dilution. The fear that the company will flood the market with new paper to fund more acquisitions is weighing heavily on the price. But let's look at the reality. They just raised over $400 million in October. They do not need to dilute for cash right now. The authorization is likely for strategic flexibility, stock-for-stock mergers, or employee retention. The market is pricing in a worst-case dilution scenario that is mathematically unlikely given their current cash position. Let's widen the lens to the institutional activity. Recent data shows a fascinating trend. While some funds have trimmed, we are seeing the entry of more specialized defense tech and deep tech funds. These are not your standard Fidelity mutual funds or Vanguard index trackers. These are active, thesis-driven investors who understand that the next decade of warfare will be fought by autonomous systems. They are looking for the Palantir of hardware, and they see the potential seeds of that in Ondas. The fact that the company has attracted enough capital to have a $400 million balance sheet speaks volumes about the institutional appetite for this story. They are not here for a 10% flip, they are here for a 10-bagger over 5 years. To understand why they are holding, we have to look at the competitive landscape. The user, in this case the military or critical infrastructure operator, has very few choices. They can buy cheap, unsecured drones from China, which are now banned for government use, or they can buy extremely expensive legacy systems from the prime contractors like Lockheed Martin. Ondas is filling the middle market, affordable, autonomous, and secure. With the acquisition of Centrix, counter-drone tech, and the investment in PDW, offensive drone tech, Ondas is building a sword and shield portfolio. They can sell you the drone to secure your perimeter and the system to shoot down the enemy's drone. This cross-selling opportunity is what the current stock price of $6.77 is completely ignoring. I want to pause here and ask you a question because your conviction is being tested today. Comment below how many shares of Ondas Holdings you currently hold and tell me, do you see the PDW investment as a masterstroke or a mistake? Are you buying this dip or are you cutting your losses? I want to see the sentiment in the comments. Moving back to the analysis, let's talk about the Ondas Autonomous Systems Unit. The revenue growth here has been nothing short of explosive, up 582% year over year in the last quarter. This is not a projection, this is booked revenue. The backlog for this unit alone is over $22 million. This growth is being driven by the Iron Drone and Optimus systems. These are drone-in-a-box solutions that function without a pilot. They take off, patrol, scan, and land to recharge all automatically. In a world of labor shortages and security threats, this is the holy grail of industrial monitoring. The market is currently valuing this growth engine at a discount because of the legacy noise. But the numbers don't lie. The growth curve is exponential, not linear. However, we must remain objective. The risks are real and present. The company is still burning cash. The net loss in the last quarter was around $7.5 million. While the cash pile gives them a massive runway, a burn rate is still a burn rate. If they cannot turn these massive investments into positive free cash flow by 2026, the market will eventually lose patience. Furthermore, the integration risk is high. Merging the cultures of Ondas, Aerobotics, Iron Drone, Centrix, and now collaborating with PDW is a management nightmare. If execution slips, if product roadmaps get delayed, the stock could easily retest the $5 lows. We saw this with other roll-up strategies in the past. Complexity is the enemy of execution. Let's compare the user experience for the investor. If you are using a SoFi trading platform or Robinhood investments account, you are likely seeing this stock purely through the lens of price action. It looks volatile and dangerous. But if you were a client of Fidelity Wealth Management or a high net worth individual using interactive brokers trading, you would likely have access to research notes that